Oil prices hit a two-year high this week, but after the protracted price slump following the Great Recession, some are still questioning the future for that commodity and how it could affect Canadians from coast to coast to coast. Elena Cherney is global energy editor at the Wall Street Journal, and she joins us now to discuss preparing for a post-peak oil world. So nice to have you back here.
Thank you.
Let's do a couple of definitions when we start here. Mentioned peak oil on the top, but there's peak demand and peak oil.
Yeah.
Tell us what both are and what's the diff.
Okay, so a few years ago, a lot of people, a lot of economists and oil analysts were talking about peak oil. And that was when oil was hitting its high prices and spiking. And there was concern that there would not actually be enough oil on the planet that would be recoverable to provide for future demand. Okay, so that was the term peak oil referred to the idea that there just isn't enough, and that's why prices were spiking. Now we've seen a real reversal, and the conversation centers much more around concerns around so-called peak demand, and that's the idea that is gaining momentum among not just analysts and economists, but among executives at some of the world's biggest energy companies, that in fact global demand for oil is likely to peak, growth is likely to peak, and then eventually start to decline. And that could happen as soon as anywhere between, estimates range from 2025 to more likely in the 2040s.
So this next question then becomes quite important to corporate executives, which is, I guess oil's about $60 a barrel right now. How confident are they that it's going to stay there for a good long period of time so that their investments will pay off?
Okay, so that's a really interesting question, and it's hard to say that it's going to remain there without going up first or down. So we could see a lot of people are talking about something called the last spike. And the idea may be that because oil has been so low for so long now, for a few years, there's been underinvestment in the industry. So that means production may not, in the immediate future, and then in the sort of short to medium term, keep up with demand. So you could actually see another moment of prices going up again.
Spiking a bit.
Spiking a bit, which for Canada, could be a good thing in the short term, depending on where you sit on these issues, which we'll get to, I guess. But in the longer term, many companies are preparing for a future in which crude oil prices remain closer to 60, and that 80 or 100 or 120 isn't really a realistic long-term price for oil.
But they can still make a buck at 60.
They could still make a buck, and it's not that the need for oil is going to disappear. It's just that demand for oil is not going to grow as fast as it has historically.
Okay, let's play some tape here. Here's the Prime Minister speaking in Houston, Texas, March of this year, about these issues and more. Roll it, Sheldon.
As I said on the very first trip to the oil patch back in 2012, no country would find 173 billion barrels of oil in the ground and just leave them there. The resource will be developed. Our job is to ensure that this is done responsibly, safely, and sustainably.
We heard from Chris Turner earlier in the program, who's just got this new book out called The Patch, all about the oil sands. And one of the key points he makes is that this is not a black and white issue. There is so much nuance around this issue that kind of both sides don't want to acknowledge, but it is there. Does that feel to you like the approach the Trudeau government is taking, a more nuanced approach, and does that line reflect it?
I think I agree with Chris. I think that, and I heard that speech actually when he made it. And remember thinking that, it's really interesting to hear a political leader articulate that kind of nuance. Nuance often gets lost in the conversation. But I think what the Prime Minister seems to be trying to articulate is, in fact, we know that the industry is changing. We know that the way the world consumes energy is changing. That's a reality. The chiefs of all the big energy companies know that and are adjusting accordingly in terms of how they invest. Where they put their bets for the future. And I think what we're hearing is the Trudeau government saying that Canada needs to do the same thing. Canada needs to be prepared for a future in which crude oil isn't the same industry as it has been historically. But that change isn't happening. It's not like turning off a switch. It's not happening overnight. And it would be almost pretending that it is changing overnight doesn't make a lot of sense if you have billions of barrels in the ground
How about,
to sell.
okay, that's oil sands policy. What about
Yeah.
on pipelines? Same type of nuanced approach or different?
I think that the pipeline policy flows from this recognition.
No pun intended.
No pun, of course not. No, no pun intended. The pipeline policy flows from the idea that demand for oil is changing, but it isn't changing so fast that you want to just kind of give up on the whole thing. And it's a pretty pragmatic approach. I think we saw that when the Prime Minister articulated, and you know, it was significant that he himself stood up and was the one to deliver the policy on Trans Mountain and Line 3, for example, that these pipelines would go ahead in order to be able to export, essentially, the oil that Canada is producing. Then Keystone got approved. That was a bit of a, perhaps, surprise, development that wasn't anticipated completely. So there may be more export capacity now than was anticipated when the government approved the other two pipelines.
Let's do a little primer here on Energy East, which of course potentially could affect this province. A reminder, Sheldon, let's bring this up. So remind everybody what it is. A proposed 4,500 kilometer long pipeline by TransCanada stretching from Alberta to an export terminal in New Brunswick. It would run through Saskatchewan, Manitoba, Ontario, and Quebec on the way and carry up to 1.1 million barrels of crude oil every day. Where's this at the moment, Elena?
Okay, so where this is at is that it is stalled. It is a question mark, and it is a question mark because the approval process by the NEB, the National Energy Board, has shifted. In August, the board announced that it was going to broaden the scope of its assessment to approve the pipeline to include looking at something that it has not previously looked at in approving or not approving pipelines, and that's the effect, the potential effect of Canadian climate change policy and GHG policy on demand for crude oil.
Those are quite the different terms of reference.
Yeah, what it does is the NEB is sort of taking on what is a very legitimate global question. How will policy around the world affect the way that countries and people consume oil? And saying, you know, we need to think about that question in deciding whether or not to go ahead and build this pipeline.
But that was never part of their past consideration.
It was not part of the past consideration.
So what's different?
Well, I think that's probably not yet well explained. I mean, I think going back to what the Prime Minister said, it's hard not to assume that the NEB's move here to broaden its scope and take arguably a more political and more ideological perspective on the approval process isn't a reflection of the Trudeau government's move to put environment at the center of its energy policy.
We don't want to be naive about these things, but the National Energy Board is supposed to be an independently operating body, but of course it doesn't operate in a vacuum. Politics are at play. Do we presume at some point the Prime Minister or somebody in his office or the Environment Minister or the Natural Resources Minister went to somebody at the NEB and said, new marching orders?
Well, I wouldn't presume that, but I think it is interesting to note that this change has happened on the watch of this government, not the previous government. It also comes after revelations that I believe previous commissioners of the NEB had been in contact with people who were working for TransCanada in Quebec. That was an issue. And the NEB also is facing, the government has signaled is in the process of overhauling the entire way that pipelines are approved. So there's some pressure on the NEB right now, I think it's fair to say.
Do we presume that the industry is not that happy about these new marching orders?
The industry or parts of the industry have signaled that they're not that happy because this really does change the game. I mean, if this kind of analysis becomes par for the course for projects, for energy-related projects, infrastructure projects in Canada, that will potentially really change the way in which the industry develops or doesn't develop.
Or doesn't, right.
And there are already a number of challenges facing the industry and future development and investment in Canada.
In our remaining moments here, let me get you to comment on this. Jeff Rubin did a report for CG. It's called Evaluating the Need for Pipelines. And here's an excerpt. Instead of benefiting from another 3 decades of business as usual growth, where world oil demand can reliably be counted on to grow at least 1% a year, oil sands producers can expect to be operating in a sharply contracting global market that would shut down as much as half of today's nearly 97 million barrels per day of production. First of all, does that ring true with what your sources tell you?
So I think Jeff's right about the global context and the likelihood that growth will not continue as we've seen it. I mean, that's what we were talking about earlier with peak demand. In terms of the oil sands, it's hard to extrapolate from that global picture back to Canada because there are a lot of other variables. What OPEC does, geopolitical disruptions in various parts of the world that, make it more attractive to invest in Canada. The big wild card for Canada is probably the longevity and the productiveness going forward of places of shale plays in the U.S., such as the Permian.
Fracking.
So yes, so if parts of the U.S. that are right now ramping up prove, as some are starting to say, to be less lasting than they may have looked even a year ago or 2 years ago, if they get tapped out, then the demand for that Canadian crude could increase. So I mean, these are factors that are still being weighed.
He's talking about an industry half the size in the future of what it is today. I mean, that's massive.
That's a provocative statement.
So was his prediction of oil at $200 a barrel, which didn't come true. How reliable do we take this one?
I'm not sure I want to, try to handicap those odds, but I think, again, there are so many other factors. It's not just about production, it's about demand. So where is that, even if, for example, Canadian output continues to grow, if the US output continues to grow as well, where's Canada going to sell its oil and who's going to buy it? And if you don't have pipelines, then you're going to have trouble finding customers, and you're going to have trouble finding customers other than the United States.
Do you, I know ever is a long time, but do you ever imagine we are going to get to a point where it doesn't make financial sense to invest in a pipeline?
It probably depends which pipeline. So I think right now we're having this conversation as the NAFTA talks are heating up again in Ottawa. I don't think that anyone would have thought 18 months ago that building a business that relied so heavily on, any kind of cross-border customer would be so risky. Apparently it is. And when you think about the energy industry, something like 97% of oil sands exports still go to the United States. So the pipelines like Energy East are, and this is what people like Frank McKenna, who's waded into this debate, are trying to point out, those are ways of diversifying your customer base. You want to make sure that you're not only selling oil to the United States. And I think this NAFTA moment is a very clear illustration of the perils of having one country, even if it's a huge and usually friendly country, as your customer.
That's Elena Cherney, the global energy editor at the Wall Street Journal. Elena, good of you to come into TVO tonight and help us out with this. Thanks so much.
Thanks, Steve.
Help TVO create a better world through the power of learning. Visit TVO.org and make a tax-deductible donation today.